Hey guys, Corey here. Welcome to the channel. If this is your first time, be sure to subscribe, tap the bell. This way you guys know when I post new videos. And if you're feeling generous, you can give me a thumbs up as it greatly helps the channel grow. Today we're going to dive right into Sofi and the earnings call and what happened to Sofi's share price yesterday. We're going to dive right into that. I'm going to explain to you guys what's going on. So be sure to stick around for the whole video because I'm going to show you guys not only why this is not as bad as it seems, also the potential possibility that the earnings estimates that happened are on purpose and involve maybe some sandbagging from Sofi. I know some people are upset that Sofi took a dive today and it dropped over $1 in the same day, immediately after earnings. There's a reason for that. Now, in my previous video, I did explain Sofi was on the move and moving up. However, I explained that in order for Sofi to break $9, we would have to beat the earnings estimate and the following upcoming quarters would have to be in line, and we would have to beat the estimate by a decent amount. Now, the EPS wasn't that big of a beat, but the income and revenue was. Now, there are some things that maybe some of you guys don't understand that happened in the earnings call, which struck fear in investors, particularly ones that are more short-term or ones that are more fearful or more cautious. Now, I'll explain to you guys what those things are and why I really wouldn't worry about it because I consider it noise in the bigger picture. And I'm going to go over those things now, and I'm going to show you guys exactly what I'm talking about. But first, I just want to point out that I'm not a financial advisor. This is not financial advice. I'm just here to give you guys news, strategies, how to manage strategies, fundamentals, technicals, financials, and just overall teach you how to be a better trader and investor. Ultimately, however, it is up to you to decide which stocks you want to buy, how much of a position size of your money you want to put in, as it's your money. Let's go ahead and chat about the earnings that Sofi had. The consensus on Wall Street was $555 million total revenue. Sofi actually did over $580 million, which was a 26% growth. The consensus was a 1 cent EPS. However, they reported 2 cents EPS. Sofi added 989,000 products this quarter for a total of 11.8 million products. Sofi Money, including checking accounts, savings account, and cash management, rose 61% to 3.9 million products. EBITDA rose 9% to 154 million, a 57% increase in the EBITDA incremental margin. Total deposits grew 16%, which is 21.6 billion, with 90% money deposits, direct deposit members. So quarter one 2024, they reported $580 million in revenue. However, last year, quarter one 2023, they reported $460 million. That's $120 million more dollars this quarter than last year's quarter one. This is all really great news. However, if you're asking me, Corey, what happened? Why did the share price fall over $1? Well, remember when I told you in my previous video that they had to beat the estimate by a lot, or at least decently? They did that in revenue. Their EPS didn't quite show it, and it's because of their conservative approach to lending, what's going on right now. Quarter two 2024 has been projected to be less than what Wall Street anticipated, and I'll explain what I'm talking about. Wall Street's estimates to loan originations are being missed by Sofi as they're taking a more conservative approach. Wall Street analysts are anticipating a $590 million total revenue income for quarter two 24. However, Sofi is projecting $555 to $565 million in total income revenue for quarter two 2024, which is at least $25 million shy of what Wall Street is anticipating. So it's not the kind of continued and consistent growth that they wanted to see, as Sofi is taking a conservative approach. And Sofi said something that could be taken quite concerning to some investors, and that is the lending segment is likely to post sequential revenue decline. And what that basically means is that they're anticipating that their revenue in the next quarter is going to be equal to this quarter or slightly less, meaning they're not progressing. And I guess what that really means is that investors were anticipating growth to get better and better, and it seems like it's slowing down a little bit while SoFi gets its house in order. And for some investors that are not playing the long game, like I always tell you guys is important, they all got out. A lot of people got out and the price came down. But you know what? This is a sale. This is time to get in and sell $7 puts, start selling covered calls, and start adding to your position. There's also a possibility that SoFi is sandbagging this information. And what I mean by that is they are setting the bar low. So this way they're setting up for themselves to beat the estimate again in quarter 2 2024. So I don't actually expect the revenue to be 555 to 565. I expect the revenue to be 590 or 595 million, maybe even 600 million. I believe SoFi is actually sandbagging their projection intentionally so that they can underpromise and overdeliver. That is pretty much what I think is going on here. They're taking the ultimate conservative approach so that they can overdeliver every quarter. In hindsight, everyone's going to look back and say, well, I wish I hadn't sold. I guess the message I'm trying to get across to you guys is anybody who sold, it's their loss. Anybody holding right now, it's their gain. And SoFi is getting stronger. This time next year, the stock is going to be even stronger than it is now. This is a long-term play with SoFi. It's not a get-rich type deal. That's for a casino. Let me show you on a graph why it's likely that SoFi is sandbagging in order to over-deliver next quarter, and also why I believe SoFi is still just as strong, if not considerably stronger than it was before the earnings. Okay, so here we are looking at SoFi's chart. Now, remember, guys, when I explained to you in the previous video that not only did the earnings call have to be good, it also had to have forward-looking statements that were in line with the growth that we were getting reported on, meaning that quarter 2 had to be as good or better than quarter 1, and they're predicting it won't be as good. That is the reason why the stock fell. And I explained that in order to break this $9 barrier, it would require not only a good quarter 1 report, but a good quarter 2 projection, which we did not get. However, I did say that if we didn't beat the earnings or something happened with the earnings that made the price come back down, that we would test the $7 support. And as you guys can see, if we zoom all the way into the 1-hour chart, you'll see all this massive rejection here. Sell-off continued. It was buying up and then selling off again, more rejection. And you can see the consolidation. Everything got real tight right here. $7 is likely the bottom, although we could see SoFi come a little bit lower down into the 683 or maybe even 675, but we're pretty close to bottom. I'm going to say that this is going to be a bottom. 693, 690, this is a bottom. And you got the moving averages right here. We fell right below drastically. This is going to come down and meet somewhere over here. So the price is going to come down to maybe 685, 690, and we're going to be back up to 750 again, most likely near the end of the month, maybe sooner. It's hard to tell exactly. If we look at Palantir, it's going exactly where I said it would go. Looking at SoundHound, I drew this arrow last week, and look at the price going exactly where I said it would go. Look at Neo. I drew all these arrows 3 videos ago. Look at this. Then I drew the box, and the price was right here, so I drew another arrow, and look, it's going right along my arrow. It's literally going where I said it would go. Now, I can't predict the future. I'm not going to be on all the time, and I'm not going to be able to guess everything to a fine-tooth comb every single time. But for the most part, I have a good idea of the market sentiment, how things move. And so I could be off. You know, maybe SoFi rejects here and comes up. Maybe it comes down here and comes up. Maybe it comes down a little further and comes up. But somewhere in this area between 670, 680 and $7, this is the bottom right now. I would be shocked if it broke below that. But I really do believe it is the bottom. We're going to have a lot of consolidation here right at the $7 mark. And then it's just going to come right back up. It's going to be very hard to break past this spot right here at $7.40. And then to break 764 is going to be even harder. We're going to be struggling. We're going to need some positive catalysts and the next earnings to do that. So it's likely we're going to be between 680 and 750 until the next earnings. Now remember, this is a long game, not a short game. Look at all of this oversold volume right here and all this red volume. It's going to have to come back up. What goes down must come up. What goes up must come down. So this will straighten out. I would not worry about it. Look at this. They beat the estimate. It's their forward-looking statements that were they're concerning to investors. Am I concerned? Not in the slightest. It's a $7 stock and it's a value at $7. We got 91 days till the next earnings. I'm not concerned. They beat the estimate with revenue. They beat the estimate with the EPS. Just their forward looking was conservative. Like I said, they're sandbagging it. I wouldn't be concerned with it. Had this been a bad earnings and SoFi had dropped all the way down here, and let's say they came all the way down here to like 620, I would be a little concerned. I'm just being honest. I would. But they pretty much stopped at $7, which is exactly where we were last week when we started rallying. People were just swing trading this. They got in and got out. I bet you a big portion of this sell-off was people who got in right here that were just getting in for the swing. Very few probably sold just on the forward-looking statements. I would say a big portion of it, a good chunk of it, was people that were just in the position for the short term in a weekly swing just to profit from earnings. And so they all started selling here and it drove the price down, so people panicked and started selling. So what I think happened was they got in, a few people started selling because of the forward-looking statements, so all the people that were in for profit started selling, which drove it down, and people started panicking because they thought, oh, well, this is the fact that the forward-looking statements weren't that good. I'm going to get out. But I think it was panic-induced selling where people were in fear, thinking it was the forward-looking statements. However, what it really was a big majority of people that got in somewhere here and were getting out here because they were swinging it for short-term swing trading, trying to make a profit. I'm not saying that was all of what was going on, but I believe that's what incited this and started it. And that, coupled with the fact that the forward-looking statements were weaker than we anticipated, scared some other investors, and that was a snowball effect that just forced it down. I think that's really the big picture here, and I think we rally back up. You got into SoFi, you believe in them, you understood what you were getting into. I hope that's the case if you're investing in them. And so you understand miracles don't happen overnight. They're getting better year over year. You see, their conservative approach shows that they're expecting an estimate of 1 cent EPS again. I believe that in July, we're probably going to see 3 cents, 2 to 3 cents again. So they're going to keep beating the estimate. Right now is not a time to panic. I know you might come down here and see that the technicals say strong sell. All it's doing is calculating this. If we take all of this away that happened yesterday, this is back to neutral against it. I wouldn't believe that. That's too short term. I would not believe this short term technical. The analyst ratings neutral 1-year price target is 872. You know, I told myself after a wicked divorce, I started going through college, was trading, learning how to get better at my craft, and was losing money. It was stressful, and I had to pay for college and put myself through college while fighting a divorce and a pandemic and trying to raise 2 boys. And I told myself that if I could have financial freedom, that I would share that with other people. I've always been a social person. I've always loved meeting new people and helping others. I've watched my brother struggle in his marriage and the things he's got going on in his life. And I want to help others, not just my family, other people. I go and donate money to the local food drive and charities when I can. And I'm not trying to say that I'm a saint or anything, but I'm just trying to say that I like helping others. And I told myself I would help people achieve their dreams of financial freedom once I got myself into a position where I had financial freedom. And I want to help you guys. And that's why I make these videos. So I guess what I'm really trying to say with SoFi is that although we beat the earnings for this quarter, SoFi's modest and conservative projection for Q2 spooked some investors. And that combined with your intraday and swing traders that were getting in on the trend over the last couple of days sold off, which created a little bit of a ripple effect and pushed the price down. And then I would think that a lot of investors that didn't really want to get out kind of got forced into getting out because of the panic and the sell-off. But I don't think this is long term. I do believe SoFi is sandbagging due to their $555 million to $565 million projection of total revenue for Q2 2024. I believe it's going to meet or even beat Wall Street's projection of $590 million. And what I think it really comes down to is that SoFi is being conservative so that they can underpromise and overdeliver. Very good fundamentals and good ethics to have as a business owner. You never want to overpromise and underdeliver. That is the quickest way to sink a business or harm a business's reputation. With Q2 2024, if they beat the estimates yet again and they're at least equal or above $565 million where they projected to be at, then we're in good shape. I think where SoFi is really going to take off is Q2 and Q3. I believe Q2 is going to meet or beat the estimate again, and if they're able to beat $590 million, that would be great. I think quarter 3 and quarter 4 is where it's really going to pick up, as SoFi did say it's a transitional year. However, I would be less concerned with the sell-off that happened yesterday and be more concerned with the fact of how much they actually improved their year-over-year growth with quarter 1 2024 and the fact that the price did not break through $7. So I guess what I'm really saying is, don't let the intraday and swing traders that got in for a quick profit and sell off mixed with the fear that it created amongst other investors to further drop the price due to forward-looking statements for quarter 2, which are really just sandbagging comments by SoFi in my true belief and honest opinion. Don't let those things get you down from the big picture, which is that SoFi is continuing to grow year over year, and not only growing year over year by a pretty decent amount. And when you look back at the previous projections from the previous quarters, history repeats itself. SoFi keeps under-promising and over-delivering. So all the people that felt the conservative fear today will not be there like we are to gain on the over-delivered promises in quarter 2 and quarter 3 and even quarter 4 in 2024. Thanks so much for watching, guys. I appreciate you being here. If it's your first time, be sure to subscribe, tap the bell. This way you guys know when I post new videos. I'm always working around the clock to give you guys the best content possible. And if you can, give me a thumbs up as it greatly helps the channel. You guys can become a member at any time now on the channel. Right below this video, you can become an exclusive member of Invest with Corey. Take care of yourselves, and until the next video, remember, let's grow our wealth together. Take care, guys.